Good evening, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is July 10th, 2012. Let's talk about, so let's get started. I just need to make something clear. Anything I say is not a recommendation to buy or sell anything. This is simply my opinion. Okay, so let's get started. This is a chart of the SPY, which is the ETF that tracks the S&P 500. What a day we had today. Look at this huge gigantic red candle. We basically gapped up this morning, and then we just bled off throughout the rest of the day. In a previous video, I did mention that we did have the possibility of this just being a consolidation pattern before heading down lower, and or we would actually come back up to test this 137.09. In which case, I may or may not take an intraday trade, but the ultimate level would have been this 138.95. However, today we came just a brief history of what this pattern looks like. We just basically consolidated with these two doji candles. I said these two doji candles do not indicate a reversal pattern, in my opinion, simply because volume was not there. However, what did happen today was we did come down, and of course we didn't get the validation of the volume, which is why we didn't get a reversal. However, again, intraday, meaning towards the end, in the beginning of the day, we did get somewhat of a reversal before we bled off to the downside. So basically, these two doji candles did hold its own. We did get somewhat of a reversal, even though I didn't think we would because of volume. And then we just came straight down into these two mathematically calculated levels. Now, the first mathematically calculated level was this 133.70, and the pink level, which is 133.99, which is, of course, as I mentioned in the previous videos, one is based on percentage and the other one is hard numbered. We also went into this 20 moving average and this 50 moving average, as well as this upper trend line here, which I explained in the previous video, which was yesterday's video, that this is going to offer some support, and I would expect a bounce off of these levels here. That's exactly what we had, at least for the intraday. Now this is the 10-minute chart of the SPY, and basically, like I said previously, we gapped up in the morning and we just kind of bled off. We came down, we bearishly consolidated. We came down, then we bounced up, and we just basically, traded sideways and until we just started bleeding off with this bearish consolidation. We just kept on bleeding off like that. Okay, so bottom line is, we went all the way into this 133.70 level, which is the level that I was just talking about. It's and then we closed right above this 133.99 level. Okay, and again, and time and time again, I will say, when you have low volume in the markets, it gives the institutions enough time to prop the markets higher, which is what we got towards the end of the day with some volume. And then, as you can see, at this time, which was 2:30, we just spiked higher, which is just not 2:30, 3:30. We just spiked higher into the closing. Okay. Now today's volume was 167 million traded versus yesterday was 103 million. So you can see the big difference in volume. I mean, although volume was still considerably low, it was above average. Our average is 150 million. Yesterday we had 103 million, which is why we only traded down 17 cents, and we had this huge, buy-in towards the buy-in towards the end of the day, which is easy to prop the markets higher again when you're on low volume. Today we had a little bit higher volume at 167 million shares traded, and you can see the big difference that when you do have higher volume, then it gives markets a chance to sell off, which is basically what happened today. So again, we went into this 133.70 level. The low of this candle here was actually 133.68. That's 2 cents difference. Okay, so this mathematically calculated level here was just 2 cents off, which is not too bad. If you had taken the trade here intraday, you would have been in the money pretty big towards the end of the closing. Now, what do I expect? Okay, this is what I expect. Back to the daily chart on the SPY. This is showing me a lot of weakness. If you can, let me just zoom in here. I wonder if you can see this red line here is the actual 50 moving average, and what they were able to do was they were able to save it and close the candle above the 50 moving average. Had the candle closed below the 50 moving average and or below this 133.70 level, I would have said that the markets have a good chance of continuing down lower, but it did close below the 20 moving average. They saved it above the 50, and of course these two mathematically calculated levels, which has been working out pretty well lately, it held up at least for today as far as the intraday goes. So that was pretty good. I'm pretty happy with that. Even though we continue down tomorrow, if we do continue down tomorrow, I don't think we will. To be in all honesty, of course, I have to look at what the charts are telling me, and right now the charts are telling me that there is a possibility that we get a small bounce tomorrow, or a sideways move. Although the move was only $1.18 lower, the actual move from up here, which is when the market's open from the gap up, was a big move down. Okay, but the move from yesterday, which was here, was only a dollar, negative 118. So it's not that much of a big deal. So, like any big move like this, and a big move like this, and a big move like this, I always say that you want to look for somewhat of a 25% retracement. Now, here's the thing: if we do not get that 25% retracement, and we break through these levels here, and let me tell you something. Like I said in the previous video, this is pretty good support. We have the 20, we have the 50 moving average, we have this trend line here coming down. And then we also have these two mathematically calculated levels that if you've been following my videos, you'll see how powerful these calculated levels can be. If we actually break down and we close below this 133.70 level, that is showing absolute weakness in the market. And ultimately, if we close below this bottom trend line here, then I think the markets will continue lower, at least into this 200 moving average, which again, I believe is going to be some weakness. Well, now that I look at it again, we're going to have this pivot point plus this 200 moving average. So if we do bleed down into this level down here, which is definitely a possibility, then I would expect at least a back test of this bottom trend line here, which is common after a breakout or breakdown, I should say. Okay, before heading down lower. So just taking a step back here, if we do break down, I expect at least to the 200 moving average, because we do have this pivot point support line here, and then we'll do another back test either to this resistance point or to this resistance point here, and then we'll go lower after that. So in my opinion, if we start consolidating sideways, or we start creating some sort of bearish pattern, either a consolidation pattern or a small, either a straight sideways pattern or a little bit curving up, like this kind of pattern here, then I would definitely sell the market, or start shorting the market at that time. Right now, it would be too late to chase. I would wait for a pattern first, okay, just to see what the markets will do, because we could obviously get a bounce tomorrow. And it's simply because we are bleeding out. All I gotta do is mention, oh, we're gonna do QE3 in a couple of months or something, retarded like that. Release rumors or whatever the possibility may be, and then we may get a spike in the market tomorrow. But if there's no major news, I do expect somewhat of a 25% retracement. I again would not make or consider a trade based off of that assumption, simply because it doesn't happen all the time. More than likely it will happen, but that's not enough of an indication to me after a big move that we'll get somewhat of a small retracement. That's just a common thing that you see, but it's definitely not something that I would make a trade off of. Now, because we are into major support here, right, and then if we do not get a bounce tomorrow, and we continue lower, and again, if we close below this bottom trend line here, and even more so if we close below and then we confirm below that candle there, say today's Tuesday, so Wednesday, Thursday, then I think the markets are doomed, at least into this 200 moving average. And that's the way I see it right now. And the only reason why I think there's a possibility of it closing below this bottom trend line is because the markets were showing a lot of weakness in the intraday charts. This was a big move down. I mean, this market wants to come down. In addition to that, I always talk about volume. Look at the volume that we had today. We had this huge volume spike, and it overtook 1, 2, 3, 4, 5. The 5 previous days, it wasn't this kind of volume, which is the kind of volume I like to see, but it's definitely higher than what we've been getting for the past 5 days. So this does constitute or validate the down move that we got today. So a lot of times when you have a big down move on higher volume like this, you see a 25% retracement, something like that, and then you look for more downside after that. In my opinion, that's normally how it works. Okay, this big down move here, as an example, we did not get that down move on volume. As you can see, we just continued higher. This is why volume is very important to me. A lot of people would have taken a short trade probably after this candle here, expecting it to come down even lower. I stayed out because I saw this bullish consolidation pattern and a possibility of going higher. You can actually review my previous videos, and I did talk about this being a possible bullish consolidation, and that's actually what it turned out to be. Again, we did not get it on volume, which is why it goes higher. It's less of a chance. I mean, with volume, to me confirms the move. Okay, that's just the bottom line. Without the volume, I can't confirm the move, and therefore I will not base a trade off of it if there's no volume. But if you see something like this where there was actually a little bit more volume here, right? We had a 25%, at least a 25% retracement before heading back down. Okay, so that's the kind of thing I want to see. This is possible. This candle isn't nearly as big as this one, but if we do get a pullback somewhat and we start consolidating sidewards, then I do expect another move down. But that remains to be seen. Okay, so let's take a look at the dollar to see if we can validate anything here. Right, this is a chart of the UUP. Let me just load my drawings in here. Oh, that is my drawings. Okay, so let's take a look here. So we have this double top move here. So looking at the UUP chart, which is somewhat different from the DX, and they're both the US dollar. Okay, so you have this up move, and what it looks like to me is that we're just bullishly consolidating. If this is in fact a bullish consolidation pattern, which is what it looks like it's turning out to be, we are close enough to this double top that will validate, or I can assume at this point that we should be getting a breakout on the dollar. Again, it really depends because the markets are definitely manipulated, and the Feds can just announce anything that they want to be. So you just can't take anything for granted in the stock market because it'll just burn you at any time, and you want to be careful. So that's why if it doesn't hit my level, then I normally don't take the trade. I mean, that's just the bottom line. Here's the thing, right? So we have this up move, and we're bullishly consolidating here. And if everything goes well, if the pattern plays out like the way it's supposed to be, like the way it's supposed to, then we should break out of this double top here, and then the market should go down simply because the dollar is opposite of the market. Market up, dollar down, and vice versa. Okay. This is another chart of the US dollars. This is the DX. Okay, let's just draw a line straight across here, and as you can see, even more worse. You have this up move here, and then now we're consolidating right under this double top here, and this will definitely, in my opinion, if this pattern plays out, and it looks like it might be, we should tag this 85.23. Again, anything can happen with the Feds because the Feds like to manipulate the market, but if there's nothing, no major news or no rumors or that, then I do expect the pattern to play out into the 85.23 level. Now, please keep in mind something very important. Every third Friday of every month is the Friday that options expire for that month. Friday the 20th, which is this month, the options for this month will expire. Therefore, next week will be the week that options expire, and therefore there's going to be tons of institutional game playing. They're gonna do some whipsawing up and down to stop people out, so you just got to be aware of that. It's going to be good for day traders, but not so good for maybe swing traders, simply because they're just going to whip you back and forth, in and out. So you're just going to have to be very careful coming next week. This week, however, if things play out the way it should, then we should see some action this week as well. Last month we actually had a lot of volatility in the markets the week before the options expiration week, and as well as the options expiration week as well. So this week is the week before options expiration, so I do see volatility starting to pick up, and you just want to be ready for that. Okay. All right, this is a chart of Apple. Okay, so just to give a quick rundown of Apple, let me load my drawings in here. All right, so we had this upward trend line here. We had this mathematically calculated level here, which was at 612.34. I did mention in the previous video that this breakout of this candle here was so close that I would need a confirmation of the breakout. We did not get that confirmation today, simply because this candle today actually pulled back in. We were negative $5.68. So now we are back in this trend line. This 612.34 and this upper trend line here is still valid, okay, because we did not confirm above it. What remains to be seen. Now, this here is not a bullish consolidation. Yes, Apple could still go higher, but it's only going to be based on the fact that Apple is a strong stock and in relative strength compared to the market, right? I mean, we all know that. I've been talking about that in previous videos. You don't want to short a strong stock, okay? But this is the Apple chart. You have this up move. A consolidation would be either down a little bit like that or straight across, all right? But it's actually going higher. Looks like Apple wants to pull back in and then start trading back into this, rising wedge, and possibly break down. Eventually, it's going to break down, but possibly possibly break down. Another thing about Apple is it does have earnings coming out on the 24th, and everybody loves Apple. And in the past years, Apple has had very good earnings. Therefore, that's something that you want to watch out for, including, not to mention, next week is options expiration, so you want to be prepared for that. But as far as Apple goes, it did not confirm above the breakout of this trend line, so I cannot validate that Apple broke out and this pattern has failed. Again, if this pattern actually does fail, Apple is probably going to hit this 657.42 to 668.87 levels, all the way up there. Okay. All right, this is chart of Walmart. Okay, so I've been talking about Walmart for a long time, and especially in yesterday's video, I said I'll probably wait for Walmart to, hit this upper trend line first. I do have this 72.22 level that, if you just look at yesterday's video, you'll just see this level here. I do not have any pink levels in here simply because, it was Walmart has just been so overextended that even with the percentage calculations, there was no calculations for Walmart. It's just because it's been just parabolic straight up into the sky. Now, as you can see, the 72.22 level has held up. Okay, so Walmart did pierce through it, like I did say in yesterday's video. I did expect the 72.22 level to pierce through it. It got close to this upper level here. I did take a short on Walmart, a swing short. Okay, and I am definitely in the money right now because I took the swing short right about there. I didn't catch it exactly at the top, but as soon as it pierced the 72.22 level, I shorted Walmart, and now I'm definitely in the money with already a break-even stop just in case we get that 25% pullback in the SPY. And with Walmart being a relative, relative strength, in strength stock, any bid on the market, Walmart should catch a nice bid too. So I may actually get stopped out for a break even, so basically a break even stop tomorrow if Walmart continues higher. If Walmart does go into this trend line, however, I will take another short after I stop out on break even. Again, I just want to be cautious with these types of stocks because they're so strong. Even if the market goes down like it did today, Walmart still is in a positive territory, which is up 35 cents, and the markets were down huge. So markets had a bloodbath, and Walmart was just cruising higher. So it's just something that you want to remember, that again, I'll say it again and again, that you want to short weak stocks and go long and strong stocks, not the opposite around. But for Walmart, I've been watching it for quite a while, so I think this hopefully is the top of Walmart, and if it is, you catch the top, then I'll be sitting pretty. But right now I'm pretty safe because I have a break-even stop, so I can't lose money on this unless Walmart for some reason gaps up and higher tomorrow, which it hasn't been doing, but it does. If it does gap a lot up tomorrow, then I'll probably stop out for a small loss. Okay, but you just got to be careful with these kind of stocks. This is a daily chart of Seagate Technologies. Okay, so Seagate, I also took a short. I took a short right here at the 2618. So right at this level here, the reason why I took the short is obviously this upper trend line plus this 2618 level. And then I said, okay, well, I'll probably sell half if it reaches this 2488 level because I got two mathematically calculated levels here, which should give pretty good support. It got close. Okay, it got really close to it, but it didn't quite get there, so I didn't actually sell my or cover my shorts just yet. So hopefully Seagate goes down again tomorrow. I do have an in the money stop on Seagate. The in the money stop is only going to be a 10% profit, so it's not going to be a big deal. But I gotta protect myself. In my opinion, if you're in the money, there's no reason why you should be losing money. You should always put in a break-even stop anytime you're in the money. It just keeps you safe. Okay. And again, capital preservation is key. You gotta just keep from losing money. Okay, you don't want to get greedy, especially in the stock market, because it will burn you. I've been burned a lot of times, I'll tell you that. And I have to learn the hard way, unfortunately, but hopefully eventually I do learn. This is the weekly chart of the STX, which is Seagate, and as you can see, there also in addition to the reason why I took this 2618 level was because the 20 moving average on the weekly chart was right at that level as well. As you can see, it actually went right into the 20 moving average on the weekly chart, and then before it pulled back. So in all honesty, I mean, the week is not over. It's only Tuesday, but if we can stay under this 20 moving average, then I think Seagate is probably gonna start breaking down shortly. Okay, so again, just a recap. We have this down move here, and then we have this bearish consolidation right into this 20 moving average before possibly heading back down, or continuing down at least into this 50 moving average, or for a double bottom here. Okay, but I'll probably be out of Seagate before that happens. Okay. Alright, so I'm just about out of time. Just wanted to say thank you very much for watching these videos. God bless to you all, and good luck to your trading. and hopefully I'll see you in the next video.